co-CEO of the company Salesforce, Keith Block, and he will be interviewed by my friend, who's really in many ways, the spiritual father of our at-work events, John Fort, who is the co-anchor of Squawk Alley on CNBC. Keith, John, come on up. Welcome. Really good to have you here.
Thanks, Harvey.
Good to see you.
Keith, thanks for kicking things off. Instant revenue update.
13 billion?
13 billion.
13 billion. Yes.
Thought you might want to add that. I'm really glad to kick off this conversation and this conference with you because I think Salesforce not only has made its presence known in San Francisco and kind of driving a stake here, but also has continued to grow at such a pace that you continue to really talk about the future of work in ways that are relevant for everybody. And so that's where I want to start. Give us your view of how some of the trends right now that we're talking about so much are impacting investment decisions. And I'm talking about big data, integrating clouds, the idea of being able to get data from places where even in this cloud era it's siloed and put it to use for companies. What needs to be top of mind for CFOs in how they make investment decisions in light of those issues?
Well, thanks, John, obviously, for being here today, and thanks to our audience for attending. You know, it's a very interesting question in the sense that, you know, the folks in this audience are CFOs. They're the keeper of the funds. They're the guardians of fiduciary responsibility, and that's obviously very, very important. We live in a world today that is unprecedented in terms of the shifts, the incredible shifts in technology that we have seen. You know, this conversion, this perfect storm of technology of cloud, mobile, social, artificial intelligence, 3D printing, all of these technologies have come together at an incredible pace, and they've had a profound implication on the world, both in the public sector, in the private sector. And, you know, the question is always, do we invest in innovation? Should we invest in innovation? Is this a fad? You know, is this real? Kind of some of the conversations that you and I have had. And it is very real. It is a global phenomenon, this whole notion of digital transformation. And as a CFO, and of course, you know, we have a world-class CFO here at Salesforce, we have to make the same decisions in terms of what do we do with our dollars? How do we invest for the future? And my advice, which of course I would give to my own CFO, is to invest in the future in terms of growth.
In terms of growth.
In terms of growth, in terms of innovation, in terms of customer.
Versus investing in savings?
Well, savings are always important, right? The bottom line is important.
Yeah.
There's no question about that. And different companies are in different stages of the maturity curve and where they are in their markets and all that good stuff. But for us, we're very much a growth company. Many of the companies represented in this audience out here in Silicon Valley, they are growth companies. And there is a tendency, or there can always be a tendency to fall back on, are we thinking the way that we've thought historically? Or are we really thinking about investing to unleash this incredible technology to drive growth, to drive innovation? And I have seen time and time again companies that we've acquired, companies that are part of our ecosystem that have not leaned in terms of investing in growth and to the extent of their survival.
So I feel like CFOs get a lot of buzzwords and just general, supposedly common knowledge thrown at them. 5 years ago, everybody was supposed to be moving to the public cloud as quickly as possible. If you were a scaredy cat, then maybe you do hybrid, but eventually but now the story has changed. So how does the smart executive prioritize what they're moving? And to what extent is there nuance based on the type of business that you're running?
Well, I think there's always some degree of skepticism anytime there's a new technology. Look, when I started at Salesforce 5 years ago, in the first month, I went on my European tour. I went over to Germany. And I was told that nobody would ever move to the cloud.
Because?
Because, well, first of all, it's SAP's backyard.
Right.
So that's going to be in SAP's best interest. And, you know, it was one of those things where in that culture, in that society, putting data in the cloud was a security risk. And, you know, we used to hear that for a long, long time. You would hear it more or less in some international markets. You would hear it in regulated industries like healthcare, financial services, even the federal government. The risk of the cloud. Look, security is top of mind for everybody. There's no end of job when it comes to security. But I think those days are largely over. I think companies have to go...
The days of being afraid of the cloud for security?
Well, you always have to think about security, but I think it's been proven time and time again that the cloud is a pretty secure environment. And in some ways, you can make the argument that it's more secure than some of the old legacy environments because the old legacy environments have been knit together over time, so there's more vulnerabilities there. I think that every company culturally has to go at a pace that they can achieve success. And when they think about moving to the cloud or investing in the cloud, they have to think about, are they going to get that return on investment? Are they going to get the value out of that investment? Will it bring the change and transformation that was promised? You know, that's really nothing new. That's been around as long as technology has been there. And I think more and more every day there are incredible proof points of companies going through amazing transformations in the cloud.
You guys made a pretty big acquisition this year, MuleSoft, which is in part about bridging between the cloud and legacy systems, in part about bridging between different clouds. Tell me about the process that led to that decision, because I mean, I know you guys, enterprise software executives, you always say, we buy what our customers tell us to buy. So I know there must have been a bunch of conversations you had where there was a gap in capability, a sale that you couldn't make because of an integration problem.
Well, in fact, at Salesforce, we do listen to our customers, and some of the best ideas are from our customers, so I really do believe that. And I think our customers believe that, but I'll tell you a personal story. So if you just took a step back and forget about MuleSoft, just talk about infrastructure software and integration software. Look, Salesforce, we're playing at an altitude where we're having conversations with CEOs. We're very, and other senior executives like CFOs, et cetera. And we're very, very fortunate that customers are coming to us and they want our advice, they want our point of view, they want our vision for how to engage with customers on a 360-degree basis. When we first started thinking about MuleSoft, we looked at that and said, well, this is integration software. What does that have to do really with CRM, the world of CRM? CRM is the fastest growing segment of enterprise software. It will be the largest segment of enterprise software in the next 3 years. And that's what got us to where we are. That's why we'll do $16 billion next year. That's why in a couple of years we'll do $23 billion. We're in a great market. We're very fortunate. And we're taking share, and it's all good. I certainly had some healthy skepticism about getting into that space around integration. Around integration, because I thought, what exactly does that fit? Is that kind of the classic plumbing integration play? And I thought, we've always been strong around the customer. So the story goes like this. One of our largest customers, we have a home and away series. The CEO of one of the largest financial services institutions that you can imagine. And he brought his entire executive team out. Now, the CEO of a financial services institution is a Fortune 100 company and is talking about their digital transformation. And that entire executive team is sitting around the table. And the CEO loves what's going on, loves what they're doing with Salesforce, loves their transformation and how they're reinventing themselves. And he said, why can't we go faster? The CIO says, we can't get the data out of the legacy system. Now, I was sitting in that meeting and I thought, that's an aha moment, right? We could have the best executive commitment in the world. We have a brilliant vision for our customers. They're changing their business model in the way that they engage with their customers. They're reinventing themselves, but they can't unleash the power of the data in the legacy system because there's decades of legacy debt, right, that's been built up to nobody's fault. It's just the way that these companies have grown up. They've acquired, they've tried to innovate, technologies have changed. And that's when it dawned on me, integration could actually be very strategic and very much a part of digital transformation.
Are CFOs tuned in enough to that portion of the conversation of understanding how all the pieces that they're being asked to buy actually fit together or don't yet?
Well, look, I think that there are some incredibly forward-thinking CFOs. And I think there are different types of CFOs.
Many of whom are in the room, I'm sure.
All of them are forward-thinking CFOs. I think what's important is that there is a role of the CFO, which of course is kind of the table stake, which is the fiduciary responsibility, and the guardians of the investment dollars, and making sure that we have accountability and compliance and all that stuff. That's table stakes to me. I think the modern CFO, if you will, is the trusted advisor, and the trusted advisor applies in many ways. One is the application of technology to enable growth and innovation, to enable culture, I think that is very, very important. So they have to be grounded in technology. I don't know how you could be a CFO now or any senior executive in any industry, not just in tech, without having some appreciation for what technology can do. And I think there's a tendency, again, not isolating CFOs, I think there's a tendency for senior executives to have distanced themselves historically from technology, that it was more of an administrative function. And that's just not the way it is anymore. In fact, some of the most forward-leaning, forward-thinking CEOs that I've had experience working with, they have become the chief transformation officer for their companies. They understand the implications of technology, and in today's world, if you don't understand what technology will do, it's going to be pretty tough sledding. You have to have some sort of a strategy to embrace technology.
Along the lines of what we're just talking about, there is a poll question up now. What is your level of confidence in your company's ability to measure the ROI of cloud migration? Be honest now. I mean, because there are a lot of promises that get put across your desk when somebody wants something, right, but really are the numbers there? And we'll check back on your answers in just a couple minutes. The cloud was supposed to make it so that people could work from anywhere. That was the dream. And I guess to some extent it has. But at the same time, I look at Salesforce's presence in San Francisco, one of the most expensive places. Amazon just announced they're opening up 2 new offices in 2 of the most expensive places to open up offices. Is it talent and the scarcity of talent that's driving that investment of capital in those locations?
Well, San Francisco is a magnet for talent, and particularly technology talent. If we think about the most capable engineering talent in the world, and there's certainly engineering talent all over the place, but it is a hotbed here. And also having a large presence in San Francisco for us is very much a part of our culture. And specific to real estate and having our real estate here, it is a big part of our culture. We want to make sure that we have collaborative workspace. We want to make sure that we have a place where our employees are proud to come to work. In fact, when you go to any building around the world, it looks like Salesforce. That's not the same for every company. It's a big part of continuing our culture. And so we want to make sure that we have enough talent in San Francisco. We want to make sure that the kernel of our culture here in San Francisco is something that we can project out to our customers, our partners, our community, and our offices all over the world, and that's why you see what we're doing here.
You also have a big presence in Indianapolis, which is a state where I went to college. I know that a lot of people were hoping that Amazon, other companies like that, would follow Salesforce's lead. And do you understand?
We love it when Amazon follows Salesforce's lead. It's a good thing.
Particularly in locating an office there.
Right.
But do you understand why, given the size of the workforce that a company like that was looking for, they went where they did? What are the calculations that you think you need to make when you're thinking about making that kind of investment and expecting talent to be there? How much of it is you build it and people come versus how much of it is you've got to really have the ecosystem going already?
Well, I think it's a little bit of both. And I mean, certainly there's economic decisions that I'm sure that Andy and company factored in, and they did that in a very smart way. And if you look at some of the rumored locations that they were looking at, they certainly picked two locations where there was enormous amounts of talent. And it wasn't just technology talent, as you know, that they're putting in those locations. But New York and Virginia are wonderful. I mean, it's kind of your backyard from where you grew up.
Yeah.
But there were other wonderful cities up there. I mean, Boston is another wonderful city. So that's my hometown. So shameless plug for the folks in Boston. But I think you have to look at talent. You have to look at infrastructure. You have to look at the ability to scale. And of course, the normal considerations of economic incentives. But I think talent and infrastructure are very, very important.
Salesforce talks a lot about its values. Mm-hmm. I know you do, Mark Benioff does. How do you invest specifically in values? What's the responsible allocation of capital to things that are really going to matter to recruit and retain the most valuable employees from Salesforce's perspective?
Well, we talk about the strength of our culture, and how important the culture is at Salesforce. And those of you who are part of the Salesforce ecosystem, I think you certainly have an appreciation for for that culture. A lot of companies talk about culture, and it can be a mythical thing. It's actually very, very real, and it is based on our core values of trust. And trust takes many forms, but trust is very, very pure.
How do you fund trust?
Well, trust, if you're a cloud business, you fund security, you fund infrastructure, you fund availability, you fund customer success, because you want to make sure that your customers are getting the value. They trust you. They're trusting their investment dollars in you. They're trusting their business on you. Mm-hmm. If we're talking about digital transformation and a CEO is making a decision about reinventing their business model, they want to know that they're picking a partner who will be there all the time, not just from a technology perspective, but culturally. Are they focused on customer success? Do they wake up every day and think about the success of those customers? So investing in the talent and the resources and the capability and the processes and the infrastructure to make that happen is very, very important.
What about internally with employees? Because especially in a talent market that's as hot as it is right now, are you able to measure how your investments of time and resource in certain initiatives are affecting your retention?
Well, thankfully our retention, I'm assuming you're talking about our employee retention, is very, very strong, even here in one of the hottest workplaces in the world. And we've become actually a destination company. We recently were recognized as the #1 place to work. And we get that sort of recognition because of our culture and our values of trust, customer success, innovation, and equality, and that is very, very meaningful. Those values are very meaningful to our employees. It's very meaningful to our customers and our partners, because values create value. Customers want to do business with us because our technology is amazing. They also want to do business with us because they respect our values. And because of those values and that culture, we've been able to attract and retain some very, very talented people. Just recently...
Can you tell which moves you've made that have really moved the needle or kept the needle from moving in the wrong direction along those lines?
Well, I'll give you a great example. We have taken 2 positions, at least, but 2 very, very notable positions around our values that I think have resonated very much, not just with our own employee base, but around the world. One was the position that we took in Indiana, right, around LGBTQ. And, then Governor Pence was about to sign some legislation that we thought that was going to have a profound impact on our employees who are members of that community. And we took a very, very strong stand on that. And it's actually heartbreaking if you ever hear the stories of our employees and how threatened they felt by what that potential legislation would bring to them. Can you imagine waking up every day and you're sitting there in a situation and the governor's about to sign legislation that would make you feel like you're working in an unsafe environment, and your company takes a position, such a strong position, that reverses the legislation? That builds loyalty. And it's not just with those employees. It becomes a situation with the community where people want to come to work. The other one is our position on equality and equal pay. And, we go through our payrolls every year and we make the adjustments because it's the right thing to do. Amazingly, we still have to go through that every year, which is, it's still incredible to me that we're facing that situation, in the 21st century, but we are. But those are 2 concrete examples of decisions that we've made, actions that we've taken as leaders in a company that represent our values, represents our culture, and you can see people wanting to come here. You can see, the story I was going to tell you is just in the last 6 months, we recruited an amazing M&A senior female executive who was making more at another company in this area. And she wanted to be part of our culture. She wanted to live our values. And she left the company, a very notable company, with a great job. And she has a great job here at Salesforce. But she wanted to come because it was a destination company. She wanted to be part of something. And, there are just examples and examples and examples about that sort of thing that we see.
Let's check on your answers to this Slido question, your level of confidence in your company's ability to measure the ROI of cloud migration. Moderately confident wins, but, barely. It's all pretty much neck and neck. Does that line up with what you're hearing from customers? It's kind of a concern if after the amount of time we've been talking cloud, it's still hard to know what you're going to get for the money you're spending.
Well, I would look at that and I'd say 67% of the feedback suggests that it's moderately to positively confident.
Okay, that's good.
So
that's a way of looking at it. And moderately confident is moving a little higher. Somebody went from highly to moderately, though.
Right.
I don't
They
know.
keep changing their answers on a
Yeah,
regular
yeah.
basis. Okay, you can't adjust. Freeze this thing. Look, I think it's always healthy to inspect. It's always healthy to inspect. It's always healthy to measure. It's always healthy to understand before you make a big investment decision, what is it that you're going to get? And look, there are some things that I think are easier to measure than others. You know, the heavy quantitative stuff I think is very easy to measure. The qualitative stuff is harder to measure. I mean, certainly, look, to give you an example, cost takeout, right? We've been doing cost takeout for hundreds of years as a culture, right? And we've probably gotten, you know, modern corporations have gotten very, very good at cost takeout. It's become a core competency. But, you know, you can't cut your way to prosperity. And you could make an argument that while we always have to be fiscally prudent, and certainly that's a responsibility of all of us as executives to return the great results for our shareholders, you know, at some point you have to grow. You have to grow. And I think there's more pressure on growth than ever because of this incredible digital transformation, this wave of technology. And if you don't focus on the customer, if you don't know who your customer is, if you can't make intelligent actions or provide intelligent insights, if you can't build that loyalty, it's going to be difficult to grow.
I want to get to one of the questions sent in on Slido. What industry sector will be transformed the most, you think, by artificial intelligence?
Well, I don't think there's any industry that's immune to artificial intelligence. So, you know, I would tell you that there are use cases in every one of these.
How about the most quickly then?
Well, look, I think financial
nearest
services is near and dear. That's kind of the low-hanging fruit, and you've seen financial services institutions do a lot with artificial intelligence. There's actually been companies that have been working with artificial intelligence for a very long time in the manufacturing sector. In fact, artificial intelligence has been around since the 1950s. What's really changed is the explosion of data and the accessibility of data to feed the artificial intelligence. So I think financial services is certainly ripe for it. Healthcare is certainly ripe for it. But you know, you look at companies like ABB over in Europe and the incredible work that their CEO, Louis Spiesshofer, is a great CEO, and what they're doing with artificial intelligence in terms of how they're reinventing their business models. They've done a terrific job. So there's really no industry that's immune to it.
Finally, inside your own organization, what's been the most interesting use case for efficiency that you've seen play out for AI?
Well, you know, we sell a technology that is enabling productivity for sales, service, and marketing executives to engage with their customers. And, you know, we have this great technology that we call Einstein, which is our applied artificial intelligence to CRM use cases. And even our own customer-facing executives and folks in the field are using artificial intelligence to be more productive. You know, use cases around leads, just a simple use case around leads. I've got 1,000 leads in front of me, but how should I focus my attention? And you know, that whole notion of lead scoring and gathering intelligence about what deal will close and what's relevant in the pipeline, we see that every day, and that's something that we certainly bring to our customers.
Keith Block, co-CEO of Salesforce. Thanks for sitting down with me.
Thanks, John. Appreciate it.